U.S. stock futures opened Tuesday evening mixed after all major indices slid during the regular trading day. Continued concerns are inflation, global economic growth, and increasing supply chain issues in China. With this, volatility is up. We've also had a tepid earnings season for big tech companies, with Microsoft rising in late trading on Tuesday after the company posted sales and earnings that exceeded estimates. However, Google fell hard after posting a sharp deceleration in YouTube ads sales growth and also missing on earnings. In other bad news, Robinhood announced on Tuesday that it will be cutting around 9% of its full-time workforce. And the news was not unexpected, as the company was under intense downside pressure following dismal guidance the previous quarter. And lastly, it appears someone decided Elon Musk needed to be punished for daring to preserve free speech by buying Twitter. Oh, the horror! And so Tesla shares got clubbed like a baby seal and tumbled over 11%. This raises the question from many on who was behind this move. By the way, has anyone seen George Soros lately? Anyone? George Soros? Anyone? Two charts today, beginning with a 6-month daily chart on the volatility index, and as you can see in the upper left, the symbol is $VIX using stockcharts.com. Now, interesting pattern that's been showing up over this
6-month, beginning here in late October, all the way through the current time frame. You can see that each of these lows is higher lows. At the same time, when we got above, say, that 16 level, we had some minor eruptions here, and then now here. But also, look closely, when the top gets here near 36, the top in the VIX often coincides with a bottom in the market. Now, this is only a short-term trading signal, at least that we're looking at now, so I'm not saying buy, but we are getting up to that 36 level here. So in my humble opinion, I think that the downside in the S&P is near a bottom. Once it gets up to that level there, you can definitely see that. Looking in the upper portion of the chart, you can see in the RSI that we're almost near that 68.26 level, which in the past, again, has coincided with some of these tops, at least in the VIX, which indicates that would be a bottom in the market. And going down here into the MACD, you can see that the fast line and the slow line are trending upward. They're strengthening with a bit of acceleration on the fast line, but I think that's not as strong as it had been in these previous moves here, and here. But we'll have to just wait and watch and see. But we're nearing that 36 level here, so my bets are going to say that the probability is we may get up to 36, we may get higher, but sooner than later I think we're starting to see the bottom in the market. So now let's go take a look at our charts. And now to the 6-month daily chart on the spiders, the SPY, and the close on Tuesday was 416.10. Now, it certainly feels bad, especially when we had this Fed speak back here. We were on our way, at least I had hoped, but then the Fed started speaking and down we go. However, the head and shoulders looks to be still intact here, more or less. We have that left shoulder here, this is the head, and then the right shoulder. Now, it's not perfect, and we have come down a little bit lower here on this right side, but in my opinion, this formation is still intact. So let's watch that over the next few days. And into the oscillator's first volume. Volume picked up a little bit, but it's not excessive. here in the MAC, you can see we've got some acceleration on the downside with that fast line moving here and the slowing up here. Both are below zero, so they're weakening, which makes that bottom and basing move a little bit more difficult. But I still think we'll get it. At least that, in my opinion, is the probability. We have more volatility, though, given the separation of the fast line and the slow line. There will be more volatility. Looking here at the histogram, you can see that we attempted a move and we got reflected here, and down we went based on that Fed speak, and certainly a punishing day on Tuesday. But let's see if this calms down here. We're still not as severe as we were back here, so I think things are still looking relatively decent. Moving here into the price rate of change, we had this sawtooth head on down pretty fast, but I think things will start to bottom and base turn sideways. We'll get that upturn here soon enough. Now, I say things don't look too bad. That depends upon your perspective, I guess. I don't have a lot of stocks that have been crashing. I do have some, but not all. And a downtrend in the market does make for opportunities. So look for those opportunities. Be a contrarian. Here in the relative index, we're definitely weakening at 24.17. Down here, we may get to this 20 level, perhaps a little bit below as we were back here, but once again, we're not as severe as we were here in early 2022. Now, moving on to the other oscillators, certainly the stochastics looked like it wanted to bottom and base, but of course, Fed speak ruined that. We're back down here again. We'll give it another attempt here relatively soon. Same thing here with the Williams. We were on our way, but no, we wanted to head back down. We're at negative 99.91. That is very severe, indicating very negative sentiment. So I like to be a contrarian in these sort of circumstances. So just watch the market, see if we start to bottom and base here relatively soon. Now, if we do break below sizably this level here, then all bets are off. But at least for now, keep stacking that cash for the opportunities that are now starting to present themselves. And for today, that's ChewDog Charts. Thank you.